Alright, so in this video I want to talk about my option trading profits for the week ending July 31st. Now the week didn't start off so good because I had a plan to just play two earnings, Spotify and Amazon, and I was expecting to make at least over $1,000 if I played them right. I ended up making $0 from both of these stocks. Now I did play Amazon, but not the way I was expecting to play. I wanted to do initially a naked call on Amazon and make maybe $700. I ended up just doing a put spread, which ended up profitable, but it was a small dollar amount. So let's go through the trades for the week ending July 31st. All right, so the first thing you can see here, so for the week ending July 31st, it'll be the ones in orange here. So the first thing you can see is the SPY put spread that I opened Wednesday, July 22nd, so the week before, but had an expiry of Wednesday, July 29th. So I closed it. I opened it for 75 cents. I closed it for 55 cents because I was worried about the 318 strike. It was one contract, so it's a $20 profit. But of course, commission is going to eat that up. But of course, I did it with another trade to split the $5 initial flat fee. So it's not going to be that bad. And then this SPY put spread here at a 312.307. This one was initially open for 70 cents. It had the Friday, July 31st expiration. I closed it for 35 cents. So these two combined, these were the two trades that I did together. So combined, they're $90 profit. So the total for the week is about $436 profit. This is before commissions. Now, when I'm going to do the monthly recap, it's going to be after commission. So you could see the difference between gross and net profit. Now, here's a trade I did on Spotify for earnings. Now, this went really bad. This was a naked call at a 350 strike. Spotify was trading at around 270 and it had earnings. So usually it's expected to move hard after earnings, but I went with a 350 call thinking that it's super safe. It's super far. It's very unlikely that Spotify opens above 350. So I sold the 350 call, naked call. So naked call, pretty dangerous. The risk is unlimited. It could open to any price. It could open to 400, 450. And in that case, my loss would be the difference between the opening price and the strike times the number of contracts. So in theory, the risk is infinite, but in reality, it's just really unlikely that that happens. Although we have been seeing lately the small cap stocks are just flying 300% every day, Kodak, but I don't think it's going to happen with Spotify because it's a big market cap. So I sold a 350 call for 10 cents and I did 15 contracts. So that's a lot. I did 15 contracts, so that I collected $150 up front when I did this trade. The idea was to close it for 1 cent after earnings is announced. So when earnings was announced, the stock actually dropped to 250, 255. So that was good. So that means this trade is completely safe. It's a winner. But I wasn't able to close it for less than 10 cents. I even saw it go to 20 cents. And the reason for that, and I realized after, was that Spotify at that level, at that strike, was trading in 5-cent increments. So I can't go lower than 5 or 10 cents. The bid was 5, the ask was 10. I'm the one selling. So I can't sell for 5 if the bid is 5 and the ask is 10. And I didn't want to hold on to it because it was taking a lot of capital. So I ended up just closing it for the same price that I sold it for. So this one was a loser. It was an average price of 10.4 or 10.6. So I was left with $6 gross profit because initially my order was 15 cents. So some of the 15 contracts got filled at 15 cents, but the average was about 10, 11 cents. So I ended up with a very small profit, but doesn't even count after commissions. I actually lost money on this trade because of commissions, but just disappointing that it was a winner, but because I was in the wrong strike, because the fill was terrible, I didn't realize that I couldn't close the trade at a penny or 2 cents or 3 cents. It's either going to be 5 cents, 10 cents, 15 cents. So that was the problem there. If I had gone with a 340 or 330 strike, I would have collected initially maybe 30 cents or 40 cents. So that would have been better. It would have been a winner. In that case, I would have made some money off of it. So just really disappointed that I decided to go further to make the trade safer and I got out with nothing. It really actually put me in a bad mood for the rest of the week. I didn't do anything. And then I just did my regular SPY put spread. So on Wednesday, actually, I didn't get filled on my regular SPY put spread. Usually on Wednesday, I do a SPY put spread, but the market went up. So my order didn't get filled and I didn't feel like readjusting my order after seeing the SPY go from 322 to 325. But then Thursday, SPY dropped. So when Thursday SPY dropped, I decided to do my Wednesday put spread on Thursday. And I went with a 315, 310 strike, collected 70 cents for the Wednesday, August 5th expiration, collected 70 cents. And then On Friday of that same week, I was able to close it for 25 cents in one day actually. So it took one day to close it for 25 cents. So that's a $90 profit. I did 2 contracts. And because I was pissed at the earning plays that I missed out, Spotify and Amazon, because Amazon that called the 30, I wanted to sell initially the 3700 call for $7 because that's what I had seen on Sunday. I didn't think that it would drop so much. On Thursday, it was worth $1. So I didn't feel like selling the 3700 call for $1 when I saw it on Sunday for $7. So for just 4 days, there was a lot of time decay. So imagine if I had sold it on Monday, I would have made $600 come Thursday before even playing earnings. But I didn't want to do that because I don't know what's going to happen in those 4 days. I mean, it could gradually go up. And if it gradually goes up, then the value of the premiums go up. Plus the maintenance excess or the capital required for the trade goes up. So not a good position to be in. But it would have been, in this case, in this scenario, I would have been way better off. So I didn't sell anything on Amazon. So I ended up doing put spreads. So I did these put spreads. I did Electronic Arts, Apple, Google, Facebook, and Amazon. So if you saw my video on my 5 earning trades, I was able to close 4 of them. Google was the only one that I wasn't able to close. So they all went up, as you probably heard in the news. Apple and Facebook went crazy up. So Electronic Arts, I opened it for 85 cents and I closed it for 40 cents. I only did 1 contract because this is earnings, so it's a bit random. It could go any direction, so I don't want to risk too much with earnings. So I did 1 contract, and so opened for 85, closed for 40, $45 profit. Apple, 81 cents, opened for 81 cents, closed for 20 cents, $61 profit. So this is open Thursday, closed Friday morning. Google, I opened for 95 cents, but I wasn't able to close it because Google dropped. So this I'm holding on to. I think Google closed at 14.80. So now I'm just stuck holding a trade. So it's a good thing that I went out of the money. It gives me room in case the stock goes wrong, in case the trade was wrong. I'm still safe because it's above my strike of 14.25, but I'm just not able to close it right away. That's the only issue. I have until August 21st. As long as Google stays above 14.25, then I can make some profit out of it. But as soon as I can close it for 50%, I'll get out of the trade. I don't have to wait till August 21st. Facebook, I opened for 95 cents. I was able to close the next day for 20 cents, $75 profit. Amazon, I opened for $1.09, 28.05 put spread. I was able to close it for 40 cents the next day, so $69 profit. And I had the SPY put spread over here that I opened on Friday. Not the best fill because SPY dropped to 319, so I could have gotten a better strike and a better fill. So I went with the 318, 313 strikes, collected 70 cents, and it's still open, of course. It's not ready to be closed, but it expires Friday, August 7th. So this one will be closed next week, hopefully for a profit. So I've got 2 open trades in my margin account right now. It is Google and SPY. So I'll try to post my monthly recap tomorrow because it'll include net of commissions for the month of July. So if you have any questions, leave them in the comment section below. And like always, if you're going to open an account with Questrade to trade on the stock market, use my referral link below to get $50 in free trades. If you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.